CNBC and the National Retail Federation releasing the latest retail monitor numbers, and senior economics reporter Steve Weissman joins us with the latest on that. Steve.
Hey, good morning, Andrew. Consumer spending pushed ahead in August with slightly above average gains held by back-to-school shopping, but the CNBC NRF Retail Monitor could also be picking up some tariff effects inside this consumer spending. The retail monitor, powered by real credit card spending data from Affinity Solutions, show total retail sales up 0.5%. That's a little bit above the running average. It's down a little bit from the 1.5% the prior month. Year over year, running strongly, 6.8%. Core retail sales, that takes out restaurants as well, up 0.3%, slightly less than the overall number, down from the strong number we had in July, 1.6%, but 6.7% year over year is pretty strong. The recent history shows considerable volatility, even with the data seasonally adjusted. Consumers look like they bought ahead of tariffs, then reduced spending, then came back, and now maybe we're settling down into a more average number here. Could also be some of the gains are reflecting inflation embedded in imported goods. The NRF said consumer spending was, quote, fueled by a still stable consumer and a robust back-to-school shopping season, supported by lower fuel costs, tax-free holidays, and consumers buying products before tariff increases take effect. But 8 of our 12 sectors did rise, paced by digital products up by 1.6%. Restaurant and bars, that's a good number. It shows a little bit of discretionary spending, maybe also a little inflation in there. Food and beverage up 1%. General merchandise up 0.4%. But a couple discretionary items right there. Sporting goods and hobby stores down 0.8%. Building and garden supplies down 2.1%. The government's going to give us the retail sales report on Tuesday, the day the Fed meeting starts. That data show nominal spending has held up the past several months, but when you adjust it for inflation, consumer spending has actually been weak the past 3 months. That could reflect a tariff impact, guys.
Are you surprised by both the higher digital spending, which I thought was a little bit of a surprise, and maybe you put it in the discretionary side, but some of those negative numbers?
Going to take a look at that, Andrew. That's been running very strong. We have a special category here, which is, online sales of software and all kinds of stuff. That has been a perennial good number for in this thing. The government's number is like online sales, and we think that's stupid because we think there's no difference right now between online and brick and mortar store sales. But looking at the digital category here, Andrew, it's been running pretty strong the last several months, and I have not been surprised by it. Let me just show you 1.31. Yeah, it's routinely up between 0.5 and 1.5%. So that's a good business to be in right now.